What is going on, Scan fam? Welcome to this week's episode of Crypto Club. As you can see, we're doing things a little differently here. And we've been joined by Rad Dad, kindly enough. Glad to have you on.
Oh, thanks for having me, man.
Of course. And we've got Gons and Dennis here as always. So without further ado, let's kick this episode off with the market overview. So looking at Ethereum here on CoinScan, you can see sitting at around 16, 18, kind of just ranging in this area. Personally, I think we will stay here for a while. Economy is still uneasy. Quantitative tightening, still just getting cranked by the Fed. So, realistically, I just see us ranging in this area for a while. Regardless, if you'll notice here, we're actually looking at the BUSD chain. So CoinScan is now cross-chain, which is very cool, supporting, 39 times as many tokens as we were before. Cool stuff to see. Without further ado, let's get into our first story here. So this article by CoinDesk is saying Coinbase is to suspend Binance USD stablecoin, saying it doesn't meet its listing standards. So Coinbase will suspend trading of Binance USD starting March 13th because the stablecoin doesn't meet its listing standards, the US cryptocurrency exchange announced in a tweet Monday. Our determination to suspend trading for BUSD is based on our own internal monitoring and review process, a spokesperson told CoinDesk. When reviewing BUSD, we determined that it no longer met our listing standards and will be suspended. The suspension affects Coinbase.com, Coinbase Pro, Coinbase Exchange, and Coinbase Prime. Users will still be able to access their BUSD funds and withdraw them at any time, Coinbase said. Binance Coin BNB, the exchange token of Binance, dropped 1% after the news and was trading at 302.5 at press time. It really doesn't go into much about which of their standards BUSD is not meeting. I think that's a very important piece of information, maybe purposely left out.
I just personally think there's a lot of back-end stuff that we personally aren't seeing quite yet. I think as other exchanges are probably reviewing the same thing, Coinbase usually sets the standard for regulation and kind of making sure that everybody feels safe and it is operating amongst regulations, especially in the United States. So it's going to be interesting to see if they come out with some type of report where it kind of clearly defines where they're kind of not within a certain benchmark of regulatory requirements.
Yeah, I think Coinbase has to sort of hold a higher standard because they're publicly traded. I mean, at the end of the day, I don't think the US controls the crypto market, though. So I think that's why BNB only went down 1% or something on the news. I mean, does CZ really give a shit? Probably not.
Right.
No, not at all. It almost feels like this is a retaliation from, it was back in September or November when Binance delisted USDC, which is, Coinbase is partnered with Circle and they have their stablecoin USDC. And so, Binance delisted them back in September. I don't see how there's any real, listing standards that Coinbase could have that would warrant them to delist BUSD other than just this is kind of like a late jab back at Binance. But I mean, ultimately, like Evan said, they didn't release kind of what their standards were, so it's all just assumptions for now.
Right. I'd be surprised if Coinbase didn't come out with some post-mortem, document on what exactly happened here. BUSD is, I want to say it's the second or third largest stablecoin, massive market cap. I'm sure it's in the top 10 tokens in existence. So, for them to delist something so huge, they should have something to back it up. Not saying they do, not saying they don't. But I just hope we see some more information come out about this.
But I think the problem is if they FUD it too hard, they're basically FUDing crypto, which is their entire business, right? So they have to be really careful about how they proceed with these types of things, because if it exposes Binance, which is obviously the biggest player in the space, then it exposes them to risk as well. So we don't want another, FTX type situation.
Right.
And that was almost my thoughts as well on why they waited so long, because one would, naturally think, okay, they delisted our coin, we're going to delist theirs right after. But then my mind went to, hey, maybe there's a strategical reason why they waited so long to do it. And I think it comes back to that, it could cause a whole stable coin FUD war if every exchange starts delisting, competitors' stable coins, or maybe there's some, news that we all don't know. and it just creates this like vicious cycle of just FUD and tanking the market further. So that's a good point as well.
Yeah, definitely don't want to strike too hard, cause some unnecessary damage and contagion. But we'll get on with our next story here. So this is talking about Coinbase announcing the Layer 2 blockchain Base to provide an on-ramp for Ethereum, Solana, and others. So Base is built on optimism, and Coinbase has no plans to issue a new network token. So crypto exchange Coinbase launched Base, a Layer 2 network built using Optimism's OP stack to attract millions of new crypto users in the coming years. The testnet of Base was started by Coinbase on Thursday. Coinbase is joining Optimism as a core developer on the open source OP stack, a developer toolkit for the Optimism network, the firm said. However, Base will not be limited to Ethereum. It will also provide easy access and secure access to Layer 2 networks such as Optimism, as well as other blockchain ecosystems like Solana. I think to see like one of the biggest players creating such an easy onboarding into DeFi is very cool. I'm sure this is why Optimism was doing so well. I think it's a smart move by Coinbase not to issue their own coin, at least at this moment in time.
Mm-hmm.
Yeah, I'm glad they didn't go the route of issuing another network token. I don't think they're all necessary when we have great chains out there. And I love Optimism. I hope that they succeed. I want them to run. And I'm glad to see that it pumped on the news in spite of my current short position. It's a very temporary thing. No, I do like the chain though.
Yeah, so getting off the story here, it says, today we're excited to announce the testnet launch of Base, an Ethereum Layer 2 network offering a secure, low-cost, developer-friendly way for anyone, anywhere to build decentralized apps on-chain, Will Robinson, Vice President of Engineering at Coinbase, told CoinDesk. We're incubating Base inside of Coinbase, leveraging the last decade of our experience building crypto products, and plan to progressively decentralize the chain over time, Robinson added. I think with all of the data that Coinbase has, they really have an opportunity here to create something very valuable, and to have such a easy onboarding process at scale is something that crypto has really been lacking, because even to this day, DeFi is extremely tough to get started on, and there's really not that open door for the people that don't really know how to use it and don't want to spend, 10, 20 hours just researching to even get started. So I think that's, very cool and very optimistic for the future of crypto.
I personally think, it's also great to see that they're actually building new things, not just like upkeeping in this type of market, but actually building new things and bringing new kind of ideas and softwares and just overall just putting their heads together during the bear market. I think that's like really refreshing to see. I know I say this quite a bit in other episodes, but it's just like great to see all these larger corporations kind of still building, especially during this kind of uncertainty in the market. So it makes me really happy, and I think they have a ton of experience and really good talented engineers to help out to make that like next push into the maturity of the crypto space.
They have a solid user base. I think a lot of people that came into the space during the last bull run started and ended at Coinbase. That was basically the extent of their crypto journey. But to get to a proper DeFi platform that required 4 or 5 other, transactions and knowledge of, 3 different exchanges to make it happen. So simpler is better. I think it's a good move.
Right. I wonder if they're going to, allow onboarding to BSC, with this whole BUSD story we just read. BSC, I want to say, is the second biggest blockchain following Ethereum. So on one hand, it'd be surprising if they didn't allow it, but on the other hand, here they are delisting BUSD. So I wouldn't necessarily be surprised.
Yeah, I don't know if they have a way to block it with bridges, but I don't know if they're actively going to promote it.
Right.
In terms of like easy UI, Coinbase is really good at creating that and really onboarding the next kind of good chunk of users. So I'm excited to see how this project is going to affect that onboarding. And usually when people think of Coinbase, they think of trust, they think of safety, they think of like easy entry. So I'm wondering if they're going to continue that kind of theme and that kind of story with their coming projects. So going to be exciting to keep tracking that in that space.
100%. We'll get on with our next story here. So Australia's finance regulator opens targeted review into Binance. Crypto exchange Binance closed 500 user positions yesterday after noting an error in how customers were classified. So Australia's financial regulator will carry out a targeted review into Binance's derivatives business in the country after the company revealed it had classified some users incorrectly. On Thursday, Binance tweeted that it had liquidated the positions of 500 of its users in Australia after identifying an error in how the accounts were labeled. Our team identified a small number of Australian users who were incorrectly classified as wholesale investors on Binance, the exchange said. Under Australian law, a wholesale investor is someone who has more experience trading and potentially more funds to do so. If they do not meet the criteria to be a wholesale client, they are classified as retail traders who are not allowed to trade derivatives. The Australian Securities and Investments Commission extended a ban on the sale of binary option derivatives to retail investors last year, citing high rates of losses among traders. I think it's interesting that that Australia takes this approach as well, like not offering derivatives to retail traders. It's the same thing in the US. You're not supposed to trade futures. And it's a double-sided blade, right? Like on one hand, people should have the freedom to do what they will with their capital. And on the other hand, it is exceptional losses, particularly in the retail segment. Do you want investor protection or do you want investor freedom? Regardless, I think it's good to see that, Binance came out and said this first. It wasn't Australia saying, hey, you guys are doing this wrong. Stop that. Binance actually came out, admitted that there was an issue here, solved it. I think naturally Australia has to retaliate in some form, right? Opening a probe or whatever you have.
Yeah, that feels pretty soft, but I don't think that's really that big of a deal. If Binance, especially if they're willing to compensate for the liquidations that were done in error, I think that's everything. We're talking about the 5 people that have never heard of a VPN before, so hopefully they make it right.
For sure. So in response to the announcement, ASIC said it was looking into Binance's derivatives arm and noted that it had not been contacted by the company directly about the error. I think that's interesting. If I was operating the biggest exchange in the world and I accidentally, was breaching some international law, I'd probably try to get through to the representatives of the country, see what there was to do about that. So after discovering that the users had been mislabeled, Binance said it informed the 500 users affected and closed their positions with immediate effect. The company will also compensate them for any losses incurred while trading derivatives on Binance. So there you have it. Imagine being one of those people that's in one of those derivative positions that got closed and you're like, holy crap, like I'm about to lose so much money, and then Binance just blesses you, liquidates you and compensates you for it.
I think that was the right thing to do. If I might not agree that they didn't reach out to the regulators and to the actual officials that were going to get them in trouble, but I'm happy that they made their customers whole and immediately took action right away. Shows that they actually care and are trying to actually fix it rather than kind of sweep it under the rug, essentially.
Right.
Liquidations are how they make their money, right? That's pure profit for Binance. So it's no skin off their back to send, some thousands of dollars back to 500 people. I think it's totally the right call.
Right. Definitely. I wonder if they're going to nullify any profitable positions that were liquidated.
I doubt it. Again, it's probably such a small amount that it's just not worth the bad PR.
Yeah. Yeah. Well, interesting stuff here. I don't imagine we'll hear more about this story. I'm sure it will develop, but it's probably not going to make the headlines. Anywho, we'll get on to our next item here, which is Yuga Labs to launch NFT collection on the Bitcoin blockchain. So if you follow the DeFi world at all, you've probably heard some stuff about these Bitcoin blockchain NFTs. It's kind of a very nascent thing in crypto right now, is the actual ability to have NFTs on the Bitcoin blockchain, although, sure, it's highly inefficient. So Yuga Labs, a leading NFT studio, is set to launch a new collection of tokens called 12-Fold on the Bitcoin blockchain. The limited edition collection will consist of 300 generative pieces inscribed on Satoshis on the Bitcoin network. This marks a significant departure from Yuga Labs' previous offerings, which were all on the Ethereum blockchain. The 12-fold NFTs will represent a complete art project that will not have any other utility or interaction with any previous, ongoing, or future Ethereum-based Yuga projects. The art was created by Yuga Labs' in-house team using 3D modeling, algorithmic construction, and high-end rendering tools. It really doesn't surprise me that Yuga Labs is doing this on the Bitcoin blockchain. Ethereum is extremely saturated with NFTs. Bitcoin there's very few NFT projects on Bitcoin, so not surprised here.
I personally think Yuga Labs is always like a pioneer in new things. They want to stand out. I think this is a great way to put kind of the spotlight and really start the trend towards a different chain. And especially with Bitcoin being the chain, I know it's not as efficient, but overall, I think this is a really cool and interesting move in terms of marketing as well, to really put the spotlight on them, and potentially a future partnership with other chains to kind of be that trend setter. So I'm excited for it. I think it's a cool move.
No, I don't disagree, but I'm curious, do we care? Do we need NFTs on Bitcoin blockchain? Yeah. Does it, ultimately, I mean, we have better chains for NFTs, so it's a great marketing stunt, because I think everything that's launched on Bitcoin is pumped to the freaking moon. So from that standpoint, 100%, I'd do the same thing if I was Yuga. I don't know if it's necessary, right?
Right.
Do any of you know what is entailed with NFTs on Bitcoin blockchain? Obviously on Ethereum, there's scaling issues when it comes to gas and minting fees and stuff. Is it even worse on Bitcoin?
I do know the transactions take, 40 minutes to complete typically?
Yes. Yeah, every block is almost an hour sometimes. So obviously it would take forever to mint, but is it also expensive to mint and transact with those contracts?
That's a good question. It looks like the article right here kind of talks about some of those differences in the network. So while NFTs have mostly been associated with the Ethereum blockchain, the Ordinals protocol has made it possible for NFTs to be created on the Bitcoin network. The number of ordinals generated through this protocol has already crossed over 100,000. However, this trend has also resulted in a sudden surge in the activity of the Bitcoin network, causing some concerns about crowding out monetary transactions. As a result of ordinals' soaring popularity, the average transaction size has surged by over 100% to 1,100 bytes. Despite these concerns, Glassnode does not believe that the trend will negatively impact monetary transactions. The launch of Yuga Labs' 12-fold NFT collection is expected to attract a lot of attention, indicating that there is still significant interest in NFTs. So that was a little less informative than I thought it would be. However, it points something very good out. In Ethereum, we have the classic bull run gas fees, right? It was $300 on average for any token swap transaction. Are we going to see gas prices on Bitcoin absolutely skyrocket?
Yeah, I was trying to do stuff when Yuga was doing their land mint, and it was chaos.
Yeah.
That, you couldn't do anything.
Yeah, that gas peaked almost 3,000 Gwei when that happened. So it was $500 just to send Ethereum, not even transact with anything.
Yeah. I want to say mint price was 2 ETH just in gas to mint the other side deeds. Yep. Crazy stuff.
Silly.
Mm-hmm.
So we'll see what happens with the blockchain and Bitcoin over there. I imagine it has to be similar unless there's a scaling solution provided by the ordinal. But also it's one of those things it's kind of on brand with Yuga. They kind of like to see that exclusivity and almost barrier to entry that
right.
Their collections provide. So
yeah. It seems like they like to break the chain as well,
yeah.
Right? So.
And also, I don't think they care about prices, because the goal is hopefully they 20x, 30x. Their goal is a lot higher than any of these gas prices or anything like that. So it's going to be exciting to kind of track, and maybe in the future podcast we can kind of circle back on it and see where it kind of evolved to be.
Right. Yeah.
I've got no doubt they'll sell out, and I've got no doubt that they'll climb. That's not, I don't think that's up for debate. I think it's an art project, because ultimately, if utility is the thing that NFTs are supposed to, get over time, nothing's going to happen on Bitcoin. It's just, it's art at that point, which is fine if you like art, but just go in knowing what you're buying.
For sure. Yeah, I think that's a very good point. yeah, I think that's going to wrap up this week's Crypto Club. Quite a different episode from what we've been doing previously. Rad Dad, thank you again so much for joining us this week. Hope to have you on sometime soon in the future. Yeah, let us know what you guys thought of this episode in the comments. Make sure you are joining the CoinScan community. You know, I mean, we've been pounding out the updates. A lot of cool new stuff at CoinScan. And yeah, we'll see you guys in our second video later this week.